Good afternoon, Namibia, and welcome to the Government Information Center. My name is Philip Zamniela, and I'll be your host for this afternoon session. Today, we're going to unpack a very interesting topic that we've seen recently. Every once in a while, we see the Bank of Namibia releasing a notice regarding the repo rate. But how many of us actually really do understand what the repo rate is and how it works? So today, we're going to have a conversation on the ripple effect of the repo rate. And this afternoon, I'm joined by Dr. Potstrik Mushendami, the Deputy Director for Micro Models and Monetary Policy at the Bank of Namibia. Good afternoon, Doctor. Thank you for joining us.
Good afternoon, Philip. Thank you for having me.
Thank you. So to dive right into our conversation this afternoon, maybe let's start it off with the basics. In layman's term, what is repo rate and why does it have to be increased constantly?
Thank you, Philip. To start with, in terms of what the repo rate stands for, the repo rate simply stands for the interest rates at which commercial banks borrow from the Bank of Namibia. Now, if I may extend on your question to say, why does the repo rate often or quite often is raised? The reason is actually to contain inflation, because that is the main tool that the Bank of Namibia is having to reduce or to contain the inflationary pressures in the economy.
Thank you, Doctor. I think we've seen recently around the 13th of February 2023, the monetary policy set and the repo rate was increased by 0.25 basis points. Can maybe tell us about the structure of the committee and the control they have over the repo rate?
Okay, thank you. The MPC consists of the governor of the Bank of Namibia, who is actually also the chairperson of the MPC, with the deputy governors also serving as ex-official members of the MPC. In addition to that, the governor have got authority to appoint a minimum of 3 to a maximum of 6 staff members to serve as members of the MPC. Right, thank you.
Thank you, Doctor. You mentioned earlier that the bank increases the repo rate to manage inflation. Can you maybe expand on that? What is the relationship between the repo rate, lending rate, and inflation?
Thank you. If I may, in terms of the relation, there is a negative relationship between inflation and interest rates. So what happens is when you increase the repo rate, of course, the prime lending rates of the commercial banks also increase. Now, the whole intention is to discourage borrowing by the households and the businesses. Once that happens, the demand in the economy also comes down. So with the reduction in overall demand in the economy of goods and services, the inflation also tends to come down. Thank you.
Maybe in a more simpler term, what effect does an increase in the repo rate have on an ordinary citizen in terms of their payments, in terms of their mortgage payments, personal loans, vehicle purchase loans? What effect does that have on that?
Thank you. Like I've alluded to earlier, the effect of an increase in the repo rate is actually to cause an increase in the borrowing costs. Hence, individuals tend to undertake or experience expensive, it becomes quite expensive for them to borrow. Whether it's on mortgages, whether it's actually vehicles or personal loans, they actually become expensive with an increase in the repo rate. So the reverse happens, or the reverse also holds, that when the repo rate declines, because the repo rate determines the other interest rates, like I've explained earlier, such as the prime lending rates of the commercial banks. So once the repo rate is reduced, the prime lending rates also comes down, and hence the cost of borrowing becomes actually cheaper. Oh, yeah. Thank you.
Tell me, doctor, what happens in the scenario where an individual has a fixed prime lending rate? What effect does the repo rate then have on that individual's mortgage payments, personal loans, or vehicle financing?
Right. You're bringing in a very interesting question in terms of if actually the interest rate or the prime is actually fixed. In that case, even if the repo rate increases, even if the prime happen to increase, that individual's interest rates on that particular, whether it's the house or actually or is a property or say a vehicle, it will actually remain constant. So he won't actually feel it. Now, on the flip side of it, when the repo rate would happen to come down, the same person is likely going to lose because he's in a fixed interest rate arrangement, and hence he's not going to experience any benefits when the repo rate comes down. That is the disadvantage part of that.
Interesting.
Thank you. Yeah.
Doctor, tell us more on the flexibility of commercial banks or financial institutions in negotiating interest rates as requested by consumers on either the mortgage, the vehicle, or personal loans. Is there some sort of flexibility, and how low can they go in terms of negotiating those interest rates?
Yeah, thank you. In fact, commercial banks are quite flexible. You have to understand that from the perspective of banking, interest rates are not uniform. What the bank would actually charge me may actually be different from what they may charge you, Philip. In the sense that when the commercial banks access our affordability, they look at my income, they look at other assets that I may actually be having, they look at my credit history. Am I a reliable client? So they take all those factors into account, and then they would determine how much they would actually charge me and how much would they charge you. So there's that flexibility looking at the credit worthiness of each and every individual, and they are not actually the same. So when the commercial banks feels like you are quite a risky customer, of course they will increase the premium, so your interest rate would actually be much higher. But if they feel looking at your portfolio in terms of your credit history and so forth, then actually your interest rates that you're likely going to be charged will be lesser compared to X customer. Thank you.
Thank you, Doctor. If you're just joining us now, welcome to the Government Information Center. Today we are unpacking the effects of the repo rate. We looked at, in layman's term, what the repo rate is, why the bank needs to increase the repo rate, the effect of the repo rate on your payments, such as your mortgage or personal loan or your vehicle finance. And we also really looked at the flexibility amongst financial institutions when it comes to negotiating interest rates. So to our viewers on our page on the Ministry of Information and Communication Technology Namibia on Facebook, and on YouTube we are on MICT Namibia. Please tune in and get your questions ready for when we open the lines. So back to our conversations, Doctor.
Yes.
In terms of SMEs and MSMEs, how does an increase in repo rate affect those businesses?
Thank you, Philip. The effect are more or less the same. So when the interest rates increase or when the repo rate increases, the SMEs are similar to the individuals. They are actually affected the same. Yeah. So also they find it quite expensive for them to borrow, unless there are certain mechanisms. Perhaps we'll come to that later. But in the absence of other mechanisms, their interest rates also increase similarly.
Thank you, Doctor. While we're on SMEs, can you tell us more about the reinstated SME Economic Recovery Loan Scheme? How does it assist these businesses to withstand the prevailing economic challenges?
Okay. No, thank you. The scheme that, there is an SME credit scheme that was reintroduced by the Bank of Namibia. Now, that scheme it's actually focused on the SMEs to help them. Because what we have seen, let me give it a little bit of a history. If I may, from 2020, for example, we have actually seen that businesses, a lot of, especially small businesses, have got out of business because of COVID, and hence the bank felt it like there's a need to support them in terms of accessing credit, and hence the bank reintroduced that scheme for the SMEs to get cheaper credit that they can actually use to invest in their businesses, and so that credit scheme, that loan scheme, they can actually use it whether to borrow for working capital, or to pay for the employees, or what so forth, or to expand their business operations, especially those that were not only exclusive to those that were affected by COVID, but any other small and medium enterprises are actually free to apply and participate in that loan scheme. Thank you.
Thank you, Doctor. Maybe while we're on the loan scheme, can you perhaps just tell us how successful has it been in terms of applications? Is the public engaging? Are they applying for this loan scheme?
Right. Thank you. In terms of success, like I've said, if you look at since 2020, the schemes wasn't very successful. The fact is, the nature of business is that even if the scheme is there, but the nature of business is that businesses would tend to invest and in their businesses, if the future is quite clear, there is actually demand for their product. But what did we see from COVID is that businesses were not really very clear in terms of where the economy was going. The demand for their products was not actually that strong. So for that reason, the demand for credit, not only to the SMEs or not only specific to that scheme, even the overall credit demand in the economy tended to come down because of that. Businesses is actually negatively related to uncertainties. So when they feel like the future is very uncertain, you won't see them actually borrow more and invest in their businesses. But as we see that the economy is now picking up, you would actually recall that last year the economy expanded by 4.6% of GDP, and of course we still expect that the economy is going to do well this year. We are likely going to register a positive growth again. So with the economy actually expanding, we expect that the demand on that scheme is also going to increase, as businesses are expected to borrow more and expand their businesses. Thank you.
Thank you, Doctor. We have recently seen a lot of financial institutions, primarily commercial banks, releasing their annual financial statements. And on top of that, we're really seeing growth in terms of profit from the commercial banks. So can you perhaps tell us the role, the repo rate, or an increase in the repo rate, how does that really affect commercial banks?
Thank you. You're very right. We have actually seen good growth in terms of the profit of the commercial banks, which, when you look from the perspective of financial stability, is not very bad. The relationship is that one should understand that interest rates are actually an income for the commercial banks. So when the interest rates are increasing, the revenue that banks gets or derives from this from the interest rates also increase, and it's actually one of the reasons that explains the good profits that the commercial banks have actually recorded, especially last year. Thank you. So there is that positive relationship. Of course, it's bad for the consumers, for the individuals like myself, for the businesses, but when it comes to the commercial banks, of course, when interest rates are increasing, it's actually a good thing for them.
Thank you, Doctor. Let me stop you there. Mm-hmm. So thank you. For those that are just joining in now, yet again, we are discussing the effect of the repo rate, or the effects of the repo rate, and I'm joined by Dr. Potrik, the Deputy Director at the Bank of Namibia. The call-in lines are now officially open. You can call in to pose your questions. The call-in line is 061 400 397. 061 400 397. Back to you, Doctor. On the flip side, you mentioned, and thank you for briefly explaining really the increase of the repo rate and how commercial banks, to them, that's a source of income. On the flip side, what are the implications of a decrease in the repo rate for commercial banks, Bank of Namibia, and also ultimately for the ordinary citizen?
Okay. I want to start with where we started, to re-emphasize that normally the whole idea of increasing the repo rate is actually to contain inflation, to make the cost of borrowing expensive. But when you look at it, who is benefiting in the long run? In the long run, the intention is actually for the individuals to benefit from an increase in the interest rate, in the sense that when interest rates are increased, the whole idea is the whole motivation or the objective is to contain inflation, because inflation can actually be can have much negative impact on the consumers, in the sense that it actually reduces their disposable income. Now, coming to the question to say, what are the implications of a reduction in the interest rates on the customers or on individuals? So when interest rates are reduced, individuals tend to benefit in the sense that their payments on mortgage, their payments on cars becomes quite cheaper. And that is on the part of the individuals and the businesses. On the part of the banks, especially the commercial banks, they tend to lose income, especially the interest rate. Interest income tend to come down on the negative. That is the negative. It have got actually a negative impact on the income levels of the banking sector, all the banks. But for the individuals, it's quite positive, and hence the consumers can actually have extra cash in their pockets to do other or to spend on other items. Thank you.
Does that have any implications on the Bank of Namibia?
Not really, but not really on the Bank of Namibia. Yeah, no.
Okay, yeah. Maybe just a slight bit of information. We are talking about the repo rate and how that is increased or decreased to combat inflation. Can you maybe just highlight to us what makes up inflation? What is inflation? People speak of a basket. What is a basket and what is in the basket?
Thank you. You know, when you talk about inflation, we say it's the rate of inflation. That is actually, it refers to the rate at which the prices of goods and services happens to increase within an economy, either in the months or whether within a year or also in 6 months. Now, to calculate this, inflation have got a lot of components. You have got your food in there. You have got other components. Oil is also a component within the inflation basket. So there are a lot of components. And what I want to, I think, put on, and then there's a domestic component like inflation that is coming from other, like from the housing sector, inflation coming from the health sector and so forth. So it's actually there are a lot of components in the all items within that forms up your overall inflation. In addition to that, there is also an aspect of your imported inflation, because some inflation is actually generated within the domestic economy, but of course, other inflation is actually being imported. For example, the petrol that we use, for example, is actually imported from elsewhere. And when the oil prices increase, that also translates in an increase in inflation. When the exchange rate, for example, depreciate or lose value, that also have got implication of increasing the overall inflation within the country. Thank you.
Thank you, Doctor. Let's perhaps move to looking at really the effects of the repo rate, or the effect of an increase in interest rates, and how those affect savings and investments. Is there a difference in as much as how much the repo rate is increasing or decreasing?
Right. No, thank you. That is one of the benefits of an increase in the repo rate or interest rates, is that for the investors, those that are holding on TBs, treasury bills, government stock, or even those that are saving within the banks, of course, what the income that they derive from those, the interest income tend to increase. So it's actually to their advantage. They capitalize on that, because the income that they will generate from that tend to increase, and hence they tend to benefit from the increase in the repo rate or in the overall interest rates environment. Thank you.
Thank you, Doctor. Looking at our economy and really looking at the most basic individual in the country, more so households, or from the perspective of households that live below the poverty margin.
Right.
What are the economic policy interventions designed in aiding this group of citizens?
Okay. Thanks. We have talked, you see, let's start with the repo rate. I have explained to say, you see, the people that are actually affected that much by inflation are the poor people, or those that are actually having less income, so to say. So it should actually be seen that any policy that intends to fight inflation or to contain inflation is for the betterment of the poor people, the poor Namibians. But of course, that is not the only policy that one can actually use. There can be another policies that can actually be used. One could actually use the tax, the fiscus, which is actually the tax policy. Of course, we have actually seen this year where the minister have actually announced that the thresholds, especially on the lower tax brackets, are going to be increased from 50,000 to 100,000. So those are some of the policy initiatives that government have actually set in place to help the poor. Last year, if I can recall, there were actually also other measures, especially on the price of petrol in terms of the levies. The levies were also reduced so as to help especially the poor to cope with the economy, that especially the high inflation that we started to experience, especially caused by the oil prices that started increasing up with the advent of the war in Russia and Ukraine. Thank you.
Thank you, Doctor.
Yeah.
I think we must really commend efforts by government to really ensure that the most basic individual in the country is sort of taken care of.
Right.
Allow me to pause there. If you're just joining us now, we are discussing the effects of the repo rate. Our studio calling number is 061 400 397. Please call in. We'd like to hear your opinion. And if you have a question, if you're watching on Facebook or on YouTube, please type down your question in the comment section, and we'll be glad to air it out to Doctor. Doctor, I have a question. And this one really speaks to looking at that the Namibian dollar is pegged to one-to-one basis to the South African rand. Mm-hmm. What role does that play, especially towards the monetary policy when the MPC is looking at whether to increase, decrease, or keep the repo rate the same? What role does that peg play in that decision?
Okay. Now, thank you. To respond to that, of course, the peg have got an important consideration in the setting up of the monetary policy. But to start with, when the MPC sits, they look at a number of variables. They would scan the international environment to look at what is coming from the international environment in terms of growth, in terms of inflation, in terms of interest rates. After scanning the international environment, then they look at they look at the development in South Africa. Of course, that is quite also key. In addition to that, they look at the domestic economy, looking at the production, looking at inflation, and so forth, and a number of other variables, including the exchange rate. Of course, I want to zoom in especially on the role that the CMA plays. Of course, the reason why it's quite pertinent or very important for the MPC to look at what happens to South Africa is the fact that because of the CMA, you don't want to maintain interest rates that are at variant with those in South Africa to mitigate against what we call to mitigate the outflow of capital or interest rate arbitrage within the two economies. So because of the CMA, it becomes quite important to say there is a need for the interest rates to be aligned. Alignment doesn't mean to say the interest rate in Namibia and those of South Africa need to be at 1:1. But of course, if there is deviation, those deviation must not be very much big to avert the issue of capital flight within the two economies. Thank you.
Thank you, Doctor.
Yeah.
We've seen recently, and economists around the world, and the message has always been that we must return back to normal. Mm-hmm. In terms of interest rates, in terms of repo rate, are we back to normal? If not so, when do we expect to be back to normal?
Yeah, thank you. Like I've said, interest rates, the purpose of the interest rates is actually to contain inflation. So what will determine whether we revert to normality is what happens to inflation. Last year, we projected inflation, both overall world inflation as well as inflation in Namibia to come down. What we have actually seen is that, of course, inflation is still high, both internationally as well as in Namibia. Inflation is still high. For example, we have actually seen inflation have actually increased from 7% in January in Namibia to 7.2% in February. Of course, our forecasts points out that within the course of the year, inflation is likely going to come down, to decline compared to what we saw last year. But it depends, those are the forecasts. Now, it will actually depend on what happens eventually within the international economy and within the domestic economy. Will inflation come down? If inflation comes down quicker than expected, of course, we could expect interest rates also to come down. But what we have seen is that inflation is still persistent, is still very high in Namibia, and hence it will actually depend on how the behavior of inflation, and it's only if inflation comes down comes down that we could expect the rates to come down. But if inflation continues to go up, we could expect rates to remain high, both in Namibia as well as the world. Thank you.
Thank you, Doctor.
Yeah.
We saw at the start of the pandemic,
Yeah.
the MPC dropped the repo rate by a few basis points.
Mm-hmm.
Was that solely because inflation was low, or was it also sort of to assist individuals to have access to funding during that difficult time?
Yeah. Thank you. During the pandemic, if one would contextualize, during the pandemic, that is actually the COVID pandemic, which started around 2020, of course, output was forecast to decline. If you remember, even the output for Namibia, the GDP came out very negative, more than 8%. We registered a negative growth of 8%, if I'm not mistaken, in 2020 because of COVID. Now, the reason why the MPC reduced the repo rate was actually to assist the businesses and the individuals, so that actually the cost of capital or the cost of borrowing becomes cheaper, so that to entice them to borrow, so that they can actually borrow, especially on the businesses. The businesses can actually borrow and invest in their businesses, so as to grow the economy and to contain the jobs and to grow the jobs. So that was really the prime intention of reducing the repo rate by then. Thank you,
Doctor. According to the Namibia Financial Stability Report of April 2022, and I know you've mentioned some of it, since the COVID pandemic began, the world economy has been affected in many ways, of which you've mentioned some. Poorer countries have suffered the most, but despite their greater resources, wealthier countries have also had their challenges. And Namibia's economy, as a developing country economy, policy has remained robust and continues to withstand domestic and external shocks. What can you attribute to this?
Okay. No, thank you. One thing is we have a much prudent banking sector in Namibia. Namibia, like I've said, is one of the countries with prudent financial sector, especially especially the banking sector is quite prudent. They have got prudent measures in place in terms of assessing credit and what so forth. So as a result, you realize it's not only the COVID. If we can rewind a little bit to 2008, when the world faced a financial crisis, you realize that financial crisis was very severe in the other parts of the world. But for the banking sector in Namibia, it was like spared. We didn't actually undergo the severe, it was not actually severely affected as in other countries, like in the US or the UK, for example. So that's also tend to explain what we have actually seen now, that actually because of prudency and they have got high capital buffers and other measures. So Namibia financial banking sector seems to actually have been spared from those negative effects of COVID, as well as the financial crisis of 2008-2009. Thank you.
Thank you. We are nearing the end of our conversation today. We're looking at the effects of the repo rate, how they affect, or what the effect is on commercial banks, what the effect is on individuals, and really what the effect is, or what drives an increase or decrease in the repo rate, specifically from the central bank. Doctor, any final concluding remarks?
Thank you. To conclude, normally there is this, because I think the viewers would, so what? We have actually seen what should we expect. Normally, like I've said, as Bank of Namibia, the MPC doesn't just wake up in the morning and decide to say, let's increase the repo rate. No. What normally the MPC normally does is, before they decide to have a decision on the interest rate or the repo rate, they always scan what happens in the international environment. They look into the domestic environment. They look at what happens in South Africa. All those variables, GDP, inflation, exchange rate, they look at those developments and ask the question, with those developments in place, what would be the best for the Namibian consumer, for the Namibian businessmen? Should MPC, what is its actually impact on inflation? Not current inflation, but future inflation. So if the MPC feels like in the next 5 or 6 months, inflation is going to increase further, in that sense, they are likely going to increase the repo rate. But if they feel to say, no, inflation is well contained, they are likely either going to reduce the interest rates or to leave it as it is. So that's what normally happens. And of course, the public, for the viewers, increases in the interest rates, of course, they are painful. But we must understand that, like any other medicine, just think of an injection. When you go to the doctor and then you get an injection is actually quite painful when you receive it. But you must look beyond the injection. Why did I receive the injection? Is to cure you in the next 3 to 4 days. So the reason of actually why we are undergoing these difficult times of high interest rates is actually to cure the Namibian consumer in the next 6 months, in the next 1 year, so that the price of commodities or the inflation should actually be contained. Otherwise, if Bank of Namibia doesn't do anything to contain the inflation, the overall impact of an increase in inflation would actually devastate the Namibian consumer. So Namibian consumer must understand that when Bank of Namibia sits or the MPC sits, it's in their best interest that the MPC considers either to increase or to do anything with the repo rate. Thank you.
Thank you so much, Doctor. Thank you so much, Namibia. Really, today I think we did justice to the topic on the repo rate, where we really examined the effects of the repo rate on the normal citizen. Dr. Mushendami is the Deputy Director for Micro Models, Monetary Policy at the Bank of Namibia. My name is Philip Zamunyela, and I was the moderator for today's session. Thank you for joining us, and see you next time.